Well, hello, trader nerds. How y'all doing? Hope everybody's doing great. And I got a feeling some of y'all about ready to throw in the towel. I think you're ready to just give up, to go back to, whatever you were doing before and buying calls and buying puts. I know you're frustrated. I got it. So, part of what we do is trader psychology and working through things. And you got to figure out, y'all, we should be grateful that we have an opportunity to experience markets like this. Because, in the last 10 years or so, other than the COVID crash, we really hadn't experienced anything of substance with a bear market. So, it's uncharted territory for many of us. That's fun. And it's good that we can have these discussions. And it's good that we can talk about risk management, talk about what we're going to do. This is the best of times, the best of times. So it's good that we're getting to experience what we're experiencing. What fun is it if the market continually goes up and we just keep closing and going to the Hello Ladies Tiki Bar every day and closing the trade? What fun is that? This is where real traders are made. So do not lose faith, old trader nerds. Make sure that you are make sure that you're enjoying this process, enjoying the learning process. Had a great discussion with our Muscadine Mafia yesterday. We were trying to talk about different hedges and different ways we might hedge the account in the event that things keep going south. But ultimately, I think the Mafia decided, kind of put a summary on it. The Mafia kind of decided, the ultimate size is the ultimate hedge is size. Keep your size small so that you can weather these type of events. So John says, continuing the trade analysis discussion from yesterday, Bobby mentioned that on the one trade that a 5% move down could breach the naked put, that I might just take a $1,300 loss. Is this really a good choice? If the plan is to make $200 a week, do we really want to lose 6 or 7 weeks worth of earnings? And the answer is, there are times that you do want to take that loss. Failure to take a loss is a problem. Failure to cut a trade that is going against you is an issue that you and I both need to resolve. So yes, there are times that we're going to experience a losing trade. Now, in our little plan, we expect our winners to be there 90% of the time or greater. We expect, 95, 96% of these things to end up winning. But yeah, there are going to be losers. They're definitely going to be losers. And you just can't not do anything. You got to figure out what your plan is. So yeah, there may be times that we need to take a $1,300 loser on a trade. Absolutely. And celebrate that. Because you go, whew, there's one out of the way. Mama said there'd be days like this. Mama said. And yeah, there's going to be days like this. So, I don't know. I just, I heard a little bit earlier today, the market was up and then the market was down. The market is bipolar right now. The market doesn't know what it wants to do. And I think there's some uncertainties in the bond market that are causing some concerns in the stock market. Yeah, that's fine. Whatever the problems are, really doesn't bother me. I'm just going to keep trading the plan. Not going to deviate from the plan. We'll trade the plan because we have a trade that has a positive expectancy. So yeah, you might take a pretty big loser every now and then. Now we'll try to do things that we can to mitigate the loser. What I was hoping today is that when the market was up earlier today, I said, oh man, I hope it's up when we were all together, because what we were going to do is we were going to put on a put debit spread together. We were going to do a put debit spread separately from a naked put. So that was what we were going to do today. Now I'm not buying a put debit spread right now with the market down 0.8%. No way. But yeah, take your losers and take them with pride, because you know that 5% of your trades are going to be losers. Take them. Take those 5% and move your butt on. Yes, that is the plan. So if it takes us 6 or 7 weeks to recover the earnings, do we care? No, don't care. because chances are we've outperformed thus far anyway, right? So we're fine. Just don't let we don't want the losers to kill us. That's what we don't want to do. We don't let the losers to kill us. So let's look at the market, down 0.8%. The volume is meh, and we are, AD is at the lows of the day. We're just off the lows of the day on AD. So the little red marks, that tells me that was AD low. So it's popping up a little bit. Here's the overnight low, and we're down below everything. Now, the cool thing is if you look over to our big green monster, our big green monster shows that we're oversold. Oversold, meaning that we should come back into the fair value zone. So this is kind of a bullish chart. We do have a point of control here, and we've got a lot of gaps. If we spend a lot of time here, though, a new point of control will be here. All right, but this is kind of bullish. If we look at linear regression, we're out of our little linear regression tube now. We're out of our channel. So what does this mean? I don't know. I just think we'll probably pop back into the channel. But that's just an opinion, and it really doesn't matter. All we can trade is what is before us. And what is before us is sometimes painful. It's sometimes painful. None of us like seeing our net lit going down. We don't like seeing that. But that's why we do not only the net lit. The only reason I record the net lit is so that I can figure out my theta and my deltas and all that. It's not to say, oh, I'm up or I'm down. So let's do it for the day. Is it going to be painful? Yes. Would I rather not do it? Yes. But I'm going to do it anyway. And I would encourage you to do it, right? Do the hard stuff. You don't want to come in here. You don't want to look at it. I don't want to look at it. There's no way I want to look at it, but I'm going to look at it. I'll behave. Let's do it. Just do it. Let's just eat it and do it. All right. So we're at 25,237.82. Okay. So we're down 386 on the day. We know we're going to be down more than that on the IRA. I'm biting my bullet, baby. I'm just doing it. So I'm going to go down here, 927.22. And today we are at 1, 2, 3. Whew. Oh, it's hurt, y'all. 97, 129.03. I don't even want to see how much it is today. It's just down. I ain't even looking over to the right. It is what it is. I'm a big boy. I can take it. Now let's go and let's do what we do always. And we're going to do our little Greekies just like always. We're not going to deviate just because the big old bad market is messing us up. So we'll go to the Crimson account first. Ooh, look at them deltas. 60.04. Oh, hey. So we'll go over here. 60.04 on that. Oh, what does that say? No adjustment. I don't know. Say no adjustment. If J114 is blank, where's J114? Oh, that's on my, what the crap? Okay, something doesn't look right. What did I say? What, 60.04 on my deltas? Okay, so it's saying I need a -22 adjustment. If J113. All right, on my theta is 44.17. All right, 44.17. So I'm a little too long, but look at my theta, y'all. My theta is so perfect. Oh, it's so good. It's right in the middle of 0.1 and 0.25 where I want to be. So one strike against me, right? My deltas are a little too long. It's saying I need -22 deltas. Okay, I can live with that. But it's saying my theta is just fine. Now, VIX is at 33, I think, y'all. VIX is at 34. Oh, big. Hey. So let's put VIX in at 34. Our buying power is at, please don't swell too much, 57.05. 57.05. So we're at 22%. We could be at 40. So the cool thing is when you start doing everything, even though my net lick is down, I'm not that bad, really. I don't feel that bad in this account. Yeah, I'm a little long for my comfort zone, but my buying power's fine. My theta's fine. So is there anything for me to do? Not really. So if I go into my decision tree, We're gonna say the market's down. Do you put on a new opening trade? It says no. Do you have any profitable trade? No. Are you comfortable waiting and doing nothing? Am I comfortable waiting and doing nothing? That's the question that many of you have. Well, I probably just ought to close out of them, Bob, and just start over. I'm not sure. So let's don't answer this question yet. Let's start going back and looking at our trades. So in this little teeny tiny account where we've made green, 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 red, red, green, 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 and now we're getting upset because we've got 5 trades on. We've got 5 trades. One of them is in the 24-day cycle. One of them is in, 2 of them are in 34-day cycle, and then 2 of them are in 52-day cycle. Okay. So we got a trade that's got 24 days on, and this is this 11117. Let's go check Mr. 11117. Let's see how bad he is. So you got to put them back in your groups again. All right, put them back in your groups again. Now I know some of y'all are, if the trade gets down to 200% loser, you close. Okay, that's fine. Y'all knock yourself out. I got a lot that are over 200%. So should I have closed everything out? I don't know, maybe. Time will tell. Time will tell. But I'm kind of more of look at the portfolio rather than the individual trades. Maybe that's the wrong way to do it. I don't know. I feel pretty confident in it. So I'm gonna go over to MES. Make sure I put MES over here. MES. I'm gonna hide my simulation. I'm gonna go single symbol, all groups, but I'm gonna do 111. Which one was it? 17. This is my oldest trade. Let's make sure that's right. 11117. Hey, Mr. 11117. Okay. So let's go get 11117 and let's see how Mr. 11117 looks. Okay. I've not breached my little strike right here, but I am close, y'all. I am close. I've not breached my break even, but we're getting close to that, right? Now, 24 days, 24 days. But we can't rely on ifs and buts and candy and nuts and Christmas every day. We can't do that. Let's move this to today. Here we are today. So we're down $295 on the trade. Okay. Now, I could close it if we get here, but if we hold on, if we hold on for a day or two, we don't blast them. And if you're, I'm going to be at $306 if I could hold on for 24 days. So look at the big theta on this little puppy right here. Now, 13 theta on this particular trade, right? So tomorrow I'll make $13, make $13, make $13. I don't see anything that's right now is saying, Bobby, get out of this trade. Now, when we are here tomorrow and it's a $357 loser and it's breached that strike, I may. But I'm not really going to look at it again today. I'm going to look at it once. I'm going to make my decision now. I'm going to make my decision now. Am I closing it today? And the answer is no. Everybody see that? I'm not closing this today. What's this? All groups. Kind of the same thing, right? All groups. One expiration. All right. So now let's go look at the rest of my little trades. Let's go. Where's my 34-day trades? My 34-day trades are the 111 18th and 19th. So let's look at those. 111 18th and 19th. 111 18th and 19th. So here we go. 111 18th. Okay. Don't behave. So we're down to 197 in that. Now that one looks even better, right? That is not a problem trade. Right now, it's not a problem trade. That is a beautiful trade that will be up $305. You look over here, be up $305. A little passage of time. It's got 9 theta on it. That's not a problem trade. Okay, let's go to the 11119. Hello, 111. Yeah, we barely in the profit. We're barely into the profit hump. We're just walking up the ladder. We're not even down there yet. So that looks perfectly fine to me. So let's go to the next one. So I got 2 52-day trades. or yeah, 52-day trades, which is the 1/1/1/20th and the 21st. So let's go look at those. 20th and the 21st. So let's look at the 20th. Yeah, we ain't even in profit, into the profit hump. Okay, let's go to the 1/1/1/21st, our last trade. Yeah, we're even further from the profit hump. What am I worried about? Let's go back to the 1/1/1/17, which was my oldest trade. So 1/1/1/17 shows that today I'm down 277, but I'll be up 306 if we kind of hang in there. All right, so then you can go, let's show all groups on one expiration. All right, let's go, all groups. We're down $817, but we'll be up $606 as of October 22nd. Then you can go look at all your little expirations over here. Look at all different things here. One expiration, I'll be at 606, 1032, 1119, 973. So don't have 1217. But as I'm looking at it, everything looks good. I do have one trade, y'all. I've got one trade that is on the cusp of being a problem child. One trade. And even that one trade ain't that bad. Some of you would probably cut it here. Some of you would probably say, Bobby, I'm not going to give it an opportunity to scratch the 30. What is the strike? I'm not going to give it the opportunity to strike down past that 3640. We're at 3649 right now. 3640. Now, what you could do, since we can't do a stop loss order or anything like that on that, you could set you an alert, right? You could set an alert to tell you if the price goes down past, our little 3640 there. You could do that. And then you go, man, I'm gonna get out. But I think I'll take my chance. I think I'm gonna take my chances and just look at it tomorrow. Now that may or may not be a good decision, because if we go down another, 5%, yeah, I'm down $800. I'm down $800. But right now, based on the forest first, right? The forest first, forest first. Here, my forest first. I'm not that bad. I'm good. So that's my decision. Some of y'all might disagree with it. Some of you might say, I'd shut it, and that's fine. What is your risk tolerance? Mine says, hey, I got one metric out of line. Everything else looks good. What am I grappling with? All right, so that's that account. Let's go to the second account. Second account is Disson. That darn dog would shut up. Did I tell y'all about him running away the other day, and I had to go find him, and he's off the side of the road, and I thought he got hit by a car? Unbelievable. He's the size of a horse. Darn thing's what is he, he's a golden dude. Unbelievable. Why is that doing that all of a sudden? Hold on. I think I got the wrong formula in there. J18, J17, J16. Is that what y'all says? If J is equal? I don't think it should be J. It should be if B109 is, hold on a second. Let me change my formula. Is that the same formula up here? If J6, I got the wrong formula. I don't like it. Have y'all noticed that doing that before? So our deltas in this account are 275. 275.26. Put it in. Shut up! And he don't know he's the size of a horse. And so he comes clopping in on the bed every morning when I'm sleeping, and it's like 222.33. 222.33. Uh-oh. 0.23. Now, my deltas are out of line. I am getting close to being out of line on my theta. Y'all see that? But I'm not. Fix is 34. I could use 40% of my buying power, but I'm only using 31,004. We're only using 31%, 32%. So I got one thing out of line, two things are okay. I mean, they're getting close, but we're, nothing to panic at. So if I look at this one, I say, I really don't have anything to panic about. Market's down. Do I make an open trade? No. Do you have any proper trade? We know the answer to that is no. Are you comfortable doing anything? Well, we hadn't answered that yet. Let's go look. Let's look at our trades. So we go to the Analyze tab. And we go. Hey, where's my darn? Oh, got them in the groups. Groups. All right. Remember, we're always looking to see if we got something that's at 21 days or close to being, we're at 324 days. So we got 524 days. Okay, that may be a little bit more of a concern. Right, just a little bit more of a concern. No big deal. But let's look at those. So 11250. Let's look at him first. 11250. Analyze. 11250. I'll look at my oldest trade. Ain't that beautiful? Ain't she pretty? My oldest trade, y'all look at her. We down $306, but we ain't even close to breaching the down thing. So I'm good with that. Let's go back in order. Let's look at the 11120. Okay, let's look at the 11120. 11120. 11120. Uh-oh. Ruh-roh, Shaggy. I'm down $877 on that trade. I am close. I really am. I'm close to the break even. I mean, not the break even, but I'm close to my stride. Not quite there. But gee, golly wheeze, if we could just hold somewhere in here, we're going to be up $918 on this trade. All right, that's not flipping me out. Right, that's not flipping me out. I'm going to keep it. Some of y'all might close it. I got it. Let's look at our third oldest trade. Our third oldest trade. Now, notice that's a stupid 111. Now, I wish I was doing all 112s, Ed. Right? But no, I had to do a 111. And of course, I had to do a 111 21st. So we know a 111 is much more likely to get bit than a 112, right? So let's go to the 111 21st. I bet it looks evil too. Well, it's not as bad. Yes, Ed's been doing 112 since 2 weeks ago. I was joking with him because a couple weeks ago he was doing all 111s, and I'm like, oh man, now I wish I'd always done all 112s, right? There's a 111 though, and we're not that bad. Not that bad. It looks pretty good. All right, so let's now go and look at what else we got. 111 21st. So now 111 24th. Let's see how that shouldn't be as bad either, right? So 111 24. See how bad it looks. Look at there, y'all. That thing's pretty. That thing's up toward the top. See how we kind of got a little bit of layering of these things. So 111 24th looks good. 111 25th. Man, I had to do 111s. 111 25th. Just looking at him. 111 25th. Where is he? Are y'all seeing it or is it just me? Where's Rick at? Rick's got to say, Bobby, it ain't on me. What the crap? Do I not have a 111 25th? Hold on. Make sure that's right. 111 25th. Huh. That's something. 111 26, 111. Oh, that's gonna drive me crazy until I find it. Where is it at? Have I got an unallocated? No, I don't have an unallocated. Huh. Okay, that's a weird one. All right, I'll figure it out. Let's go back. We'll skip the 111 25th. We got a 112 53rd. 112 53rd. 112 53rd. 112 53rd. Oh man, ain't she a thing of beauty? Ain't she pretty? 112 53rd. 112 54th. 112.54. Ain't she pretty? Look at there, down 382, but we'll be up 313 if we hold on. Let's go to the other one, 112.50, what's that, 54? So then we got 112.55. 112.55. Ain't she pretty? Ain't she pretty? All right, so let's go find what else we got. 112.55. 111.26. Hopefully we'll find where we messed up at. 111.26. See if we got one of them. Yes, we do. 111.26. Ain't she pretty? That one looks fine. So let's see, make sure that's right. 3,500 is right. 111.26. 3,500. Yep, that's it. All right, then we got a 111.27. See what she looks like. 111.27. Okay, we're up here, just barely going into the profit 10. I like it. No big deal there. So let's go back. 111.27. 111.28. 111.28. Takes a while to do the analysis, y'all. You know, it's just part of it. Okay, we're not even in the profit 10 at all. Everything looks good there, down $122, but we'll be up 56 if we stay there. Okay, 112.28. Let's see, we ought to be getting close toward the end. 111.29. That ought to be even better. Let's see if we find it. 111.29. Oh yeah. See? Nothing bad there. And then we got 111.30. 111.30. Okay. So everything looks really, really good. So I've got two problem children. I got one in the other account and one in the other account. And one in this account. This one's down 800 something dollars. Let's find what the problem child was. And it happens to be the oldest trade, right? It's our 111.24. Let's look at it again. 111.24. Because this is the one that could hurt a little bit, right? Because it's $800 loser today. 111.24. No, is that it? No, that wasn't a big win loser, was it? It's this other one. It's the, no, it's up here. Here it is. 112.50. It's the 111.20th, I think, is the big one. 111.20. Let me find it. 111.20. Yeah, that's the one that's giving us fits. Where is the devil? 20. There she is. Yeah, that's it. That's it. And it's one of those weird little things, right? We stay right here, we're up $918 in just less than a month. If we go down to the break even today, we would be down $1,300, right? That's the one that y'all were talking about. Would I take the $1,300 loss here? Is it better to take the loss today and, you know, just bite it, take it in the bud, get your account back in order and take the loss? Yeah, you could certainly do that. And the reason that we could do that is because we know that we've made $6,731.54 for this trade. Well, we've done that, right? We have, I mean, there's no doubt this is after commission, you know, so if we lose $800, well, we still got $8,000, and I would be pretty certain that we still have a positive expectancy. Now, the reason I'm not closing the trade today, let's go back to it, because I'm not a trade manager, I'm a portfolio manager. Going back to the Greeks. This is okay. This is okay. This is a little above. Big deal. So I'm not going to manage that trade. Not today. Now I made my decision. Questions or comments? How y'all feeling? I mean, I don't want y'all to give up the ghost. I don't want y'all to throw up your hands. We've got positive expectancy here. I know the number of losses are very small, but doesn't the size of the loss impact the, yeah, oh yeah, it does. It does. But remember, the losses are going to be bigger than the winners. And I mean, this isn't the first time that we've had losers either, right? Let's go back in this account. Let's see, we've had, it ain't the first time. If I were to take it off here, we've had well, those were negligible. Yeah, here's a $500 loser right there. Right? We just don't have them that often. There's a $61. I mean, we hadn't had hardly any losers in this account at all. Yeah, it's going to hurt us, but over time, we still got a positive expectancy. So based on the overall metrics of the account, and I could pay for this dearly tomorrow. We'll see. Ultimately, the question is, do we manage the size of the loss by closing earlier, giving up the chance for trade to recover? For example, you've got a 3630 naked put expiring 10/21. You can close full trade today for a $360 loss. Yeah. Or wait until the strike is breached with a 5% down move for $900. Looks like Bobby's 11117. I'm here and look at the theta in the trade, look at the portfolio metrics, and make the decision based on your risk tolerance. Absolutely. Summary: be mechanical with the trade entry and the portfolio metrics, but use your risk tolerance to make the final decision. Yeah, and remember, we've even got that built in here, right? So we've got it built into my decision here. Are you comfortable waiting and doing nothing? Am I comfortable waiting and doing nothing? Now, well, if I said no, what's this? What I've built in automatically. Now, maybe I need to adjust these. If I say no, then what it tells me to do is, okay, let's take a smaller loss on another trade. It doesn't say close the one nearest to expiration. It didn't say take the biggest loser. It says, close a trade with a small loss right now. Now, is that the ultimate thing that I need to say? Maybe it should say, close the one that's, the problem child. I don't know. We can fix it to be there, but right now it says close the smallest loser. And that way I could say, okay, I'm gonna take off a little risk. We're gonna leave that other one on to percolate, right? And then you go over here and you go, okay, well, maybe if we did something like that, negative 148, negative just to kind of take off. But let's look at the difference in them. Here's the one that was giving me trouble, right? Wasn't it the 11120th in this account? Down 540%. Yeah. I think that's it. So down 540%, right? So, it's down $911 on this trade. Or I could close something that's, just barely down. I don't have anything that's barely down. Negative 227 is one. Negative 148, profit on this is down 136 on the whole trade. The theta on that is 7.8 compared to the theta on this one of 66. So, these are the decisions that we got to make. Decisions you got to make. But I believe where I'm at right now, I'm going to do nothing.
You went mute on us, Bobby. Still can't hear you.
All right, how about now?
Yeah, you're fine now.
Oh, it went out. Must be my cat back there. So right now I'm going, yeah, I think I'm fine. Just based on the portfolio. Now we'll see tomorrow when I have maybe, if my theta goes up too much, now I got 2 out of 3, then maybe and I'll probably take a bigger loss. We'll see. But I'm willing to roll the dice. For my risk tolerance level, I'm fine. I'm just fine. All right. Great. Who just wrote something here? So Ed says, you can also roll these naked puts out an expiration or two and use the existing put debit spread trade to protect it and or add another. Yeah, you could do that, right? And don't forget your put debit spread in rolling reestablishing process. Don't forget your PDS is fully in the money and will mature for max profit to partially offset these drawdowns if held until it's marking near the full price. Yeah, so let's see, it was the 11120th. Let me go back again. Let's see what Ed's talking about doing here. So he's saying, I kind of am of the mindset that, you know, what goes on as a trade, take it off as a complete package, right? But Ed's saying, you know, you could roll that 3640. Roll the 3640 in that trade. So let's see what that would do. Let's see, 3640 is at 1/1/20th, where are you? 1/1/20th is in the 24-day cycle, right? So in the 24-day cycle, so 3640. So let's go find that. 3640. Yeah, look, we're almost in the money. You see it right there, right? We're almost in the money. So create a rolling order. Me and that, let's see, what should we, what all these were here. So we would be buying back this and selling out that, right, for a 1225 credit. But what Ed is saying here is, and it's really is something to think about, right? Because look, he's saying, hey, don't forget, you also are going to have a profit from that put debit spread, most likely, right? I mean, most likely with 24 days, it's going to end, you know, probably at full profit. So what Ed's saying is you could even roll the new strike even down farther, right? So say you root it down to 30, let's say 36. Say you could roll out and get even safer, bring in a very small credit of, you know, $51 and, you know, keep that dream alive. And I kind of like that, right? You could even, Ed's what, and what Ed is saying, you know, Bob, you could even roll it out to where you could perhaps, so that would be break even, right? Or a little bit of a debit. Ed's saying, hey, you can move that farther out and get it much safer and pay a quarter, or yeah, let's say we're going to pay quarter debit, right? Or quarter debit. Now, and let's say that this is going to cost you $12.57 after commission. Well, that will be offset by your put debit spread. Out to October 31st, 3610 strike for 260. You know what? That just sounds pretty good right there. Now that I think about it. Because we can roll it out, make it safer, right? Rolling it down, knowing that, hey, you know, market surely will recover at some point. That's kind of cool, isn't it? I kind of like that. I kind of like that, Ed. And that way you're going, I mean, in other words, instead of just rolling it to the same strike, which I really hate, you're rolling it to a safer position. And what is this one that we're at here? This one is at that is October the 22nd expiration. I mean, October the 5th. And let me, it's hard for me to tell what these expirations are. Get off there. So this one is, it's the same darn thing. Anyway, you can roll these out to different oh, here's the expiration. So yeah, all the different expirations there. Make it a little safer. I like that. And the put debit spread will keep protecting it in maturity or have another fire to put out later. Defense isn't fun, but it's possible to an extent. Yeah, it really is. So, and the best time to roll, if you're going to roll, I'm not a big roller, but if you're going to roll, when is the best time to roll it? Best time to roll it is right when the strike is breached, right? That's the best time to roll. It's when that strike is breached. Your strike gets hit, roll it on out, baby. Now, it would take me a while to figure out how to do the accounting for it, since I've got it as a single trade, but you know, I could figure that out some way. I could certainly figure that out some way. And if you wanted to, you could certainly, put on another put debit spread too, right? You know, you're saying, oh, my deltas are too whatnot. I mean, you certainly could do that. Yeah. Yeah, John, I like what you said too. What we're trying to do is to just get more time for the market to go up or not go too much further down. No one knows, but would our graphs tell us what will happen in the next 24 days or so? Yeah, you'll buy more time. Yeah, you know, and that's the thing, right? So when we look at our graph, you know, what our belief is, and the market can do anything, but our belief is we're kind of bullish here. You know, we're kind of bullish. We're oversold. We believe, and we've seen the big green monster, you know, really helps. So, you know, maybe rolling that out is definitely the best course of action. I just got to figure out how to account for it because I like the analysis that we did there, and I appreciate Ed for bringing that up. Because what I was just going to do is that's going to take the loss. Now, really, you are taking the loss. Y'all do realize that, right? You are losing on that particular trade. I mean, if you close it for a loss and you roll it out, I mean, it is a loser. So would leave the put debit spread on to mature a little bit more. Let's look at our put debit spread on now. Let's go back to the 111. Y'all help me remember what it is. 111.20. Let's go back and look at it. This is so good, y'all. This is why it's so good for us to get together. All right. So let's go back to 111.20. Y'all like this. Let's do this little analysis. Okay. So let's take the little, what you call them off here. Let's take our little thing off here and let's see what our little, what you call it looks like today. All right. There's our put debit spread. See, it's not quite at a full profit. Y'all see that? We're at $520 profit, but we've got another, y'all help me, $90 or so, right? $83. We got another $83 in profit. We've got another $83 in profit left for us to get on our put debit spread in 24 days if we just sit here. That's cool, y'all. That's cool. Ed talking about taxes. Yeah, we don't want to talk about taxes. Unbelievable. It says, but tax wise, it washes out and this gives you a chance for recovery and you take the kind of loss you face now. Futures for 1256 contracts. So don't worry about gains, losses from an official taxation standpoint. If you have the BP and desire to roll it, just get out or roll again when the put debit spread matures. And John said, yep, good news. My buying power use is not bad. So total portfolio, not a big risk for just one trade. Ed's almost got me convinced to go ahead and roll this thing today. You know, Ed is making a difference in your life. What a difference Ed made in my life. So I don't know. Maybe I'll do that. Or do y'all want to see that now or what? Let's go back to it. Let's see what our trade is. Looks right here. What's the market been doing since we've been talking about it? I mean, if you're going to do it, man, this is the time to do it, isn't it? This is the dang time to do it. Yeah, John, I'm with you. What we do? Let's just do it. Y'all want to? Let's just do it. Now, I want to make sure I'm in the right expiration here. I'm not voting on that. Oh, come on, Ed. Ed, you're going to talk me into it. All right, so let's look where we're at right now. We're in this expiration right here. Here's my 3640s, right? So let's see where we want to roll out. Ed, where did you roll it out at? Did you find out the 3640 at this one right here? Let me just get a screenshot of all these. Again, I'm not a roller. October 31st, which is October 31st. Which one's October 31st? 10 days, October, probably this one, right? That'd be the end of October. Yeah. October 31st, 3610.
That's it, Bobby. The 34 DTE.
So what we could do is what I say it was a 3640
Yeah, you're rolling the October 21st, 3640.
So you said the 3610 would still give me a credit, right?
But look for you're at go to the 24 DTE. Hang on. Go clear
Well, I was
that.
just
Go
gonna
back.
see what kind of credit I could get on this.
Yeah, oh, okay.
So if I did this, I'm gonna get a credit of 1679. And to close my existing trade, because that's what a roll is, right?
But I think you're in the 24 day and you're going to roll it to the 34 day.
Mhm. So 3640 here. So close. $17.25. So that wouldn't quite give me a credit at the 3610.
Yeah, but if you go out 3 more days to the next contract, go out to the October 31st, 34 day.
Thought that's where I went.
Yep.
And you said 3610?
Yeah, the 3600 is a $1.35 debit. And the 3610 is a $2.55 credit. You're going to sell that one.
Oh, yeah, sorry. Oh,
Yep.
Yeah. Yeah.
And the only harm I really see is, you could be left with no put debit spread protection for 10 days, but you could also commit to just facing this decision now on the day of expiration of that put debit spread, which will only let it mature more fully.
Well, and the only other thing, okay, so let's say that the 3610 gets breached. Well, we could roll it out again.
You can roll it again. I mean, you're in rolling hell. No one likes rolling hell, but it's better than just, to me, I'm not giving advice. I just think it's better to roll than to say, okay, that's it. I'm taking this off. I'm taking the loss. I'm going to go put on another trade, bring in another, standard credit. I don't want to name dollars because it depends on what contract you're trading, but if the market collapses to 3,400, it's still going to collapse to 3,400. Now you're out now and you've accepted the loss. So that's the other side. Accepting the full loss now is accepting it. Whereas if we get in plunge mode from here, I'm not saying we are, but if we do, and we go down 200 points, that the loss on this roll might be higher. You know what I'm saying? You're going to incur more loss at that point. So it's not a slam dunk that you're going to get away with anything. It's just giving you 2 more weeks of breathing room and 40 more points up, 40 more measly points, a little over 1% to the downside.
And John is saying all the rolling keeps using more buying power, right? I've never rolled a lot before. It's not something.
No, when you
it's a significant.
I don't think it's much either, because you're taking your current position where the buying power has gone up and you're rolling it out a little bit in time and a little bit down with the same number of contracts. So it should really, I'm not a margin expert. My guess is it would go down a tiny little amount. That's my guess, is your margin will go down. The buying power effect will be beneficial to your portfolio. Because you are taking a little heat off the immediate position and pushing it out. So that should be recognized in the buying power. But again, you're only moving at 1% away.
And y'all, that's the key. Even if our buying power goes up a little bit, that's the key of keeping our buying power in check anyway, right? So that we don't go, 98 or 100% buying power. But the more I think about it, the more I kind of like this. I'm anti-rolling, but I kind of say, I think what kind of really helps me is this. Look, why would I take this put debit spread off when I got, I got another $100 in this thing. Now I understand it's offsetting the loss that I'm having on my naked thing, but then I'm able to roll out to a safer position. Let me show y'all something real quick. Here's what I want you to do. I want you to go to our thing here, and I think I've got it in here. This is y'all's homework, since I can't get if Ed any homework since you quit my class. I want y'all to go to. Since Ed quit, no, he didn't.
I'm gonna have my framed diploma pretty
I
soon.
cannot wait to
so-
see that. If I wasn't so cheap, Ed, I would have got you a diploma and sent it.
No. You've been generous enough, but when you make that crackpot comment again, I'll put my camera on my diploma and let people
I hope
watch.
you get like one of those nice little frames that's got like the lights on it that kind of like illuminates it or something. Anyway,
I think I'm gonna get something subtle and put it right behind my head. So when you're looking at my head, you'll see my my certificate behind me.
so if you look from 7/26/21, oh sweet Bobby, y'all remember him? Remember? I said, everyone, please watch this. The good stuff begins at 14/25 and goes through 20/45. This concept of rolling down and out will be an essential part of our put selling strategy. I said it then. Look at this. I didn't say it may be. I said it will be an essential part of our strategy. I said it there. I just didn't believe it until Ed brought it back up today. So I want y'all to go in resources tab. I want y'all to watch this. All right, this option trading concept flag. And you'll hear Mike Butler say, I never thought about this. If my strike gets breached, all I gotta do is keep rolling it down. Hell, I just keep rolling it down now, down now, down now. I can do that indefinitely. And that's what we could do here. I mean, it really is. I kind of like this. It's kind of like I've got a goosey feeling all over. It's like I've got chill bumps.
Now, again, Bobby, like John is asking or making this statement, is 1% safer 10 days later? Is that really safer? Yeah, no, not really. You know, it's 10 more days for the thing to go haywire, but it's also 10 more days for stability and recovery. So, you know,
But-
it is a decision to be made. And Bobby, you're going to love this comment, but in your situation where you have 3 strikes, you could take one of the losses and roll 2 of them.
Oh my
You know,
God.
there's always a little compromise to be made.
Yeah,
I know
I agree, man.
everybody hates those decisions, and I'm not saying to make that one either, but these are all decisions that can be made when in defense mode.
Yeah, absolutely. So here's what I'm gonna do. I'm gonna pray about it. That's what I tell people at church. I'm gonna pray about it. See what I'm gonna do, and I'll tell you what I did tomorrow. Okay, but I'm gonna put the pencil to it. I'm gonna do some analysis. I'm gonna do some deep breathing, and I'm gonna make my decision. This has been a great session, though, y'all. It's been a really, really good session. This is what this group is all about, right? Isn't that what Karen said when she met with us? What's that, to roll? Rolling. Yeah, she rolled out in 1 week. That's what she did. Yeah, Karen's still rolling now. Pray, baby, pray. That's me, John. Gotta hit the knees sometime. All right, it's been a great session, y'all. It's been a really great session. So, you know, it's good that we're going through this now, right? We don't have to go through this. And now the market's back up. Dang it! Yeah, I won't be able to roll at a maximum credit. Unbelievable. Is the market back up? Look at this, y'all. Ed started speaking, and what happened? Look at this. We just busted right through. All right. Y'all have a great, great, great rest of your day. I will see y'all tomorrow.